Good morning. It is Tuesday, December 17th. Notice I didn't have to even look at the calendar. It seems that yesterday I screwed up the date and I called yesterday Monday, December 17th. But no, in fact, today is Tuesday, December 17th, but you already knew that, right? So this is the Zero DTE morning market analysis, and this is where we determine our orientation for the day for our Zero DTE trades. Of course, we trade asymmetric butterflies, out of the money butterflies, so that we can gain an edge and keep our drawdowns low, our volatility of returns low, while maximizing our return on capital. So today's focus is going to be on the FOMC, the Federal Reserve, and tomorrow they're going to be announcing their rate cuts that they've been promising us, and everybody is assuming that they're going to do a 25 basis point cut, whether we need it or not. Now, there's some argument as to whether or not we need that. Inflation has already been showing to increase, it is on the increase. It hasn't waned as they want to get down to their magical 2% level. And we saw that in the PCI, and the other inflation indicators are holding steady. So why are they cutting rates? I thought cutting rates is what potentially would cause a greater money supply and inflation to go up. It's a big mystery, but the market is expecting it, and they are expecting it in a big way. And I guess the best way that we can tell that is by looking at something called the FedWatch Tool. Now, the FedWatch Tool, let's see if we can get to it. The FedWatch Tool is an indicator that will show you the probability of a rate cut. Now, what I need to do is bring this over here. This is obviously not the FedWatch Tool. I have it set up here. And that's not the FedWatch Tool either. But this is, so the FedWatch Tool is looking at Fed fund futures, and it will, each meeting that they're scheduled to have, you can see them, they're listed on top here. Here are the future meetings for January 25th, and we'll get the supposed rate cut percentages or probabilities, and here's for March and May and so on. So this is coming up December 18th, which is tomorrow. So that's why I'm putting a little bit more emphasis on it, and we're going to see a stark difference in some of the things that we look at every morning between today and tomorrow. So the probability of a rate cut to 25 basis points, or bring it down to a range of 425 to 450 basis points from 450 to 475, is 97.1%. There's still a 2.9% holdout. Who are those people? Who are those people that are saying, no rate cut? We don't know. Effectively, it's going to happen. It might as well be 100%. So this is an accurate tool if you ever want to know what the disposition of the Fed is and what they're going to do. But the big news tomorrow will be after the rate cuts. So the rate cuts will be released at 2 p.m. Eastern Time. And we can take a look at that too. At the economic calendar, we can see that the economic projections and the fund rates, they'll all be released at 2 p.m. in their statement. But the statement's going to be important, as the linguistic AI tools will be waiting for that report to come out, and they'll parse every single word to see if there's any difference in the Fed narrative. But the truth is, what everyone's really waiting for is 2:30 for the FOMC presser, where Jerome Powell will get up there and answer questions about why he's doing what they're doing and what they project in the future, what is the state of the economy, etc. They're always wrong, so it doesn't matter to me, but it does matter to the press, and it does matter to the market and how they orientate themselves and the level of volatility and the excitement. As you know, we've been going through this amazing bull run since the election. So this could either stymie that run, or it could fuel it, or it could be a nothing burger. So that's what we're all waiting to see. So anyways, there's the FedWatch Tool. I'll put a link down in the description for you. Before we get started, let me just talk a little bit about the Zero DTE Academy that's going to be released officially in the beginning of the new year. And it is a fantastic community where you can learn all about the Zero DTE strategy, process, and methods. But it goes way beyond that. We'll have the foundational course in there. There will also be live calls for both beginners and advanced users. There's even a section on mind over markets, focusing on mental toughness, resource guides, including downloadable trader's manual and trade log spreadsheets, other tools that you can use to help your trading, and a vast array of videos. A huge collection, all for only $35 a month. Now, it's not officially open, but it looks like members are already starting to come in. I expect that once we start doing our promotion, this community is going to be growing rapidly. And it's a community too, so you can be there with like-minded people and ask questions, all for just $35 a month plus live interaction. I mean, it's really an incredible value. And it's the stepping stone to our coaching service. So there you go. Let's go back to TradingView. And we're going to get on to our morning market analysis. It seems that volatility on the VIX is inching up ever so slightly. It's now at 15.01. Yesterday it was at around 14 and change, and the day before, and then Friday it was in the 13s. And so while it is inching up from a volatility regime, big picture point of view, it's still super low in zombie land. And that means that most premium in options has accelerated its premium decay, so leaving less premium to collect on that very last day of expiration. So we have to counter that, plus the increased gamma risk with less exposure to that market because that risk is higher. So we have to accept the fact that there is less meat in the bone, that opportunity is less, and we have to act more quickly because of that higher sensitivity to the price caused by the gamma. And so our widths are 10 to 20 wide. Now let's take a look at the big ass fly that gives us a more localized version or vision of volatility or implied volatility. And I have that set up in Thinkorswim. So what I do is I put on a 50 wide butterfly at the money with the ES in the morning so that we can see what the pricing of that fly is. Now this pricing is going to change according to the amount of implied volatility that is present, and it will be a direct reflection on that rate of premium decay. And as you can see, the cost of this fly and the amount that this fly has already decayed the premium so that there's very, very little potential left in it is a very strong showing of the advanced accelerated decay of premium. And when price gets way up there, we take notice. So right now it's in the 30s. Actually, earlier it was as high as 35. But I imagine that we have some economic reports that are coming out this morning that the market is looking at, and so IV is increasing as those reports will be coming out at 8:30 in an hour. So I expect that it will probably maybe get up, maybe as low, the debit will get as low as 30, but not much more. Tomorrow, I think the debit is going to be significantly lower with anticipation of the FOMC minutes being released for the rate cuts. So that's how it works. As we get into events, volatility will start increasing and premium decay will start getting delayed. So what will happen as volatility increases, the debit on this fly will start shrinking. So it's a very interesting phenomenon. Maybe later this week I'll do a focus on it on Thursday and Friday about the decay rate of premium and how volatility affects it directly. But you can see it like a beautiful indicator by using this pre-market 50 wide at the money fly. It really is giving you a peer in on how the market is planning to price options. And so for this reason, we don't take that big ass fly in the morning unless that debit is at least 25 or less. In other words, there's more volatility in the morning and premium decay has been delayed, and there would be more opportunity and lower gamma, all the great things that make the big ass fly such a fantastic trade. But that's not happening this morning. So all right, let's go on to the next thing. So we got volatility out of the way. The next is to look at market direction. Not much change here. We're kind of going sideways. We're still under the moving average, so we're calling for a bearish bias. That means that we're going to be putting out of the money put flies below the market. So where are we going to put it and when are we going to put it? Well, that's really dependent upon our structural analysis. So we do a volume profile structural analysis. And as you can see, these lines are actually mapping out various features of the profile. And they will be showing us where likely support and resistance are, because that's the structure of the market, the levels of inflection where battles are happening, showing where the market is finding value and where it's not finding value. And so we use that and look at the morning session. That's what these vertical lines are. They're mapping out or masking out the morning session from 9:30 to 12:30. That's because that's where the most volatility is. And so we're looking for, in the case of a bearish move, we're looking for a move that will move up into one of these and then move down. Now, as it turns out, yesterday it looked like we were going to get such a move. It moved up into one of those levels, started to move down, and then reversed. So, although, look, later in the day it did finally move up to this level here and then came down. But that's outside of our trading window, so we never took that trade. So we're looking for something similar to happen today, where we'll move up into one of these levels during this period of time. The reason why this looks narrower is I'm using a special candle. It's called volume-based candles. And if I choose just regular-based candles, they'll all be the same width, see? So in case you were confused why it looks different day to day. The volume-based candles is a fantastic addition to TradingView. So there we go. That's what we're looking for, either there or wherever else there might be. As you can see here, it came right up to this level and bounced off. So there you go. Anything else we can look at? How about this? Tesla! Holy crap. Tesla at 474 this morning. Another, 4% rise. It's just incredible. I'll have to say, in our service, I back in, not this past January, but the January before, when Tesla hit a low, I screamed, "We're all in, we're all in." And ever since then, we've been riding that wave. Of course, for a good portion of time, it went sideways. It did reach a good high after the low, and then retreated. But now it is rewarding us for staying with it. And Tesla is on a magnificent run. A lot of analysts think that it's going to go much higher. So we're holding, and we also use Tesla in our Zero DTE trades. In fact, I do have a trade on. I'm not going to show it right now. I'll show it on Friday and see if we've done some good on that front as well. But whenever I make money on those Zero DTE trades, I just buy more Tesla. All right, back to the big head. All right, so that's our morning market analysis. We've got the Fed tool. We do have economic reports that are coming up that are are going to be impactful. And of course, tomorrow with the FOMC. So thank you very much. It's been a pleasure. Don't forget about the Zero DTE Academy. When it starts up, there are going to be live services that are going to be added to that. And check out the calendar. There are going to be other live events that we'll be performing as well. Fantastic resource for both beginners and advanced users. Zero DTE Academy, only $35 a month. We'll see you. Have a great trading day. Take care.